Welcome back to a most recommended daily dip where we got the guys that you wanted most on a special episode, and we're gonna have another one on Thursday, hopefully. On this one though, we're gonna have Hugh, of course. We got Teddy talking about his swings. We got Neo discussing options. And of course, we have Mr. Perez talking about some shit I don't understand. Let's go.
All right, so swings. AVGR, I know what I want to do. We'll talk about it on Sunday's podcast. I'm not changing much, but I have a detailed plan of how I want to go about it because I still think that we can make a fuck ton of money on it. So Sunday, new plan on AVGR. EVFM, what a pain in the dick, man. 350 just doesn't want to break. That's okay. We knew that 350 was going to be tough. We tried it 3 times. Hopefully, the 4 times the charm. But man, what a pain in the dick. Gives me nightmares. Our Tesla Lottos last night that I took. At like 5:30 this morning, I looked and Tesla was at 520, going for 530, and I was so happy. Our calls were like, we're gonna be up like 100%. It was gonna be great. And then obviously that offering came out. I do think that the offering helps clean up the balance sheet for S&P inclusion. I've been harping on this for 6 weeks. It's coming. It's not even a question. Okay, you guys yelled at me in the podcast because they're not included yet. I'll put my life on it that they're included. Okay. So yeah, we got AVGR, EVFM, the swing that we added yesterday. It came down 8% with the entire market. Nothing you can really do about that. I'm not in huge. I'm accumulating. I like our risk to reward, but we're still a few weeks out. So that's how I feel about that. Is I'm going to accumulate. The entire biopharma market was down today. It is what it is.
Hey everybody, Mr. Prez here, back for another episode of the Daily Dip. We're going to be quickly going over one of my favorite patterns to trade on large cap options, one of my most favorite bullish patterns, and that's going to be the inverse head and shoulders. I'm sure most of you have heard of the standard head and shoulder. You've got your left shoulder, head, right shoulder, neckline, and then you go short. Inverted head and shoulders, same exact concept. Can lead to pretty sharp moves up, which are good for your options, your volatility, your Vega. So your inverse head and shoulders is literally the same thing. You've got an attempt down with a reversal, an attempt lower with a reversal, and an attempt slightly lower with a reversal yet again. And what happens is once you breach this neckline, you typically have to wait for price to move up, come back down. The inverse head and shoulder is not a inverse head and shoulder until it comes down, retests the neckline, and blasts back off. If you use this pattern on a 1 hour, 2 hour, 4 hour, daily, weekly chart, the moves are massive because the way that you calculate your price target on this is you take the distance between the bottom of the head to the neckline and you project that same distance from the breakout point up. And that's your technical price target for your inverse head and shoulders. So this is a pattern that actually helped me nail a pretty significant move on Amazon, and I'll get into a live example right here. Let's see. Here you go. Back in March, or I guess April, after the COVID crash had kind of settled down. This is how I nailed almost a 400-point move on Amazon. So, not every pattern is going to be perfect. You've got your left shoulder, your another attempt down, and then you've got your right shoulder. Now, this one kind of questionable, but it's still like an attempt and reversal. So it's good enough, And so basically what I did is, had your neckline right here, but if you watched my first video, on my YouTube channel, I take major supports and resistances off of weekly and daily levels and chart them. So I noticed that the neckline could pretty much align with this 2039.47 level. So once this neckline was broken, I took the distance from this green candle down here, drew it up to the quote unquote the neckline, and I literally just projected that onto a price level, and that was my target. And look how that worked. And almost a non-stop move up. I actually gave this alert out in Atlas, and I think I alerted the 2100 calls. They went from $1,200. I think 3 days later, 3 sessions later, they were $36,000 a piece. So, and this is on a daily chart. So that's why you have such an exaggerated, 400 point move. The base of the head is, around 1700, and the shoulder neckline is at, 2040. So that's about a 400, 350, $400 gap, and that's your price target for the pattern. Same thing on intraday patterns. You take the distance, add it to the neckline, and boom, you got money.
Hey guys, what's going on? It's Neil here from Wolf Trading. You can find me on Twitter at the Desert Wolf with the letter E at the end. Another episode of the Daily Dip. Dan, thanks for having me. Always a pleasure. September has begun. Did we start it off on the right foot? We started it off on the right foot. Let's generally talk about the markets today. What's hot and what's not. Like we were talking about last week, the penny stocks, they have been really quiet here in August. Hopefully in September, they're going to get some rejuvenation and we'll see a couple of the common names running again. Are we looking for those lows and potentially, stacking up for a swing trade? I'm looking for them. Are the biotechs, have they been taking a beating? They've been taking a little bit of a beating. We've seen a lot of them come, 10, 20, 30, 40, 50% off of their yearly highs here. But they are always ready to run with some news or a catalyst coming out. So we always have to be on the lookout for that. We're going to just talk quickly about Tesla and Apple. They've been on an absolute tear in the month of August. Tesla took a little bit of a dip today. Are we scared about it? Not really. It tends to do that. I've been watching it recently. The Tuesday, Wednesday, it likes to dip. But coming up to the end of the week, for those weekly options, it tends to start to ramp up. Apple, I'm loving Apple. Apple, I think, can potentially just break through the 150. And I know it finished, I think, at 134, but I think it has the potential to get back up over 200 potentially by the end of the year. They're releasing the new iPhone and its 5G capabilities. I'm sure we're going to see tons of pre-orders. We're going to see those lineups, and I think they're going to be making the right moves to get back to that 200 range. Walmart, am I loving Walmart? I'm loving Walmart right now. Um, we saw today that they released their subscription service, something that's competitive to Amazon. So I think that's really going to be in favor for them with this with the way the world's going right now. So they have a subscription. You pay $98 a year and you get free delivery on all of your groceries, all of the in-store items, and a lot of them are going to be same day shipping if it's in stock. Another one I'm looking at very closely is Sony. Sony's coming off its 52-week high at $84. You can see it down here. It's at $79. So this past weekend, they released the invitations for the pre-orders of the PS5. Now, the PS5 is scheduled to come out, I believe, around Christmas time. So we could see those pre-order numbers maybe in the end of September to October area. So you're definitely going to see a boost with that. Another thing that I love, they're getting into the telehealth industry. They've acquired a company who's big in telehealth, and I think that's going to really propel them forward. Another couple large caps, but not these megas. We're going to talk about RKT, Rocket Mortgages. And Rocket Mortgages has been on an absolute tear since we were talking about it at 1850 and the $19 range. We bought call options there, and their earnings come out tomorrow, and their preliminary earnings were absolutely amazing. So I'm definitely looking at that. Another one I'm looking at, maybe not too many people know about, is Upwork. We've seen Fiverr go on an absolute tear. Upwork, I mean, it's chugging along here, but I think Upwork could potentially see the same market cap as Fiverr. Another one that's under the radar, it had earnings yesterday. The earnings were absolutely amazing. Is Rackspace Technologies. You might have heard some rumors that Amazon wants to buy a minority stake in them. This company is already owned by Apollo Global Management. They are the institution that brought them public. They own the majority stake in them. And what's really cool about that is Rackspace, the owner, sorry, Apollo, also owns Tech Data, which is another they're a private company, but they just bought them for 5 billion. So they both work in the cloud computing space. You can potentially see a partnership here, and I like RXT right now. I think it can hit anywhere from the $30 to the $40 range. A lot of price analysts came out and said, between 28 and the highest was $44. So I'm definitely looking at that. And the last one I'm looking at right now is DraftKings. Football's approaching. DraftKings looks like it could potentially get back to its high of $44. So I'm definitely taking a look at DraftKings right now. Maybe looking at the options for September 18th to October. We could potentially see it hitting maybe $50. So I'd like to thank you guys for listening to me, and have a wonderful day. God bless.
Guys, this is Thick Teddy. I'm here again to give my thoughts on the market right now and go over some more DD, a little bit of chart analysis, and what I think about a couple stocks that I like. First off, we got HMHC. So I'm going to start with the chart analysis. As you can see, I kind of drew on the trend that I'm seeing. Obviously, stocks do not repeat everything that they do in the past, but we kind of see this triangle mountain peak type of thing, whatever you want to call it, along with a reversal at the bottom and then another run directly after. And so I'm adding at around, I added around 2, and I'm adding a little more in the 220s. And we are seeing the reversal that we wanted. So I'm hoping that we can get a run out of it and maybe get back up into the $3 range, $3.50. Who knows? But for sure, they've landed more contracts recently. And in my opinion, there's no reason that they should have dropped the way they did. And so I'm thinking that it just needed a pullback to consolidate, and that we'll get another run out of it. And also another big point to add for them is they are 93% institutionally owned, with more buys coming in recently. So, and for anyone confused on that, it's basically 93% owned by big money. So that's a big factor that I like about HMHC. Second off, we have VTGN. I love this stock. I love their product. I love their pipelines. I'm going to focus on their anti-anxiety medication that's on demand, which would be an absolute game changer. I'm going to college for psychology, all that kind of stuff, and I've talked to a lot of people about it, professors and people who are psychiatrists, that kind of thing, and they say that it would be crazy. They would prescribe an on-demand anxiety treatment more than they can even count. So in my opinion, it's going to be big if they can get it FDA approved. They want to do phase 3 by the end of the year, and the FDA is fast tracking them, and they already have commercialization deals for, I think it's Asia. So they're tapping into the Asia market, and they're also going to get FDA approval here and be able to start producing here. Looking at the chart for it though, so we had a big run after that offering closed from about 0.8 to 105, and we've had a pullback here, but it's still following the master support trend line. and it's kind of finding a little support, bouncing in between. We had a golden cross at the beginning of August, and I'm liking it at these levels. If it breaks support, I'll add more because I'm long on it, and I'm long for the FDA approval, but I like it at these levels too. And lastly, we have DSS. DSS is Document Security System. If you heard certain unnamed individuals talking about it a ton before their accounts got deleted. So what happened was, that's kind of caused this drop, is there was a ton of hype around it going into the acquisition of Impact Biomedical, and it kind of ran on all of this hype and all of the expectations. And then there was kind of like, I think it was a pause where they did not report it at the time that they claimed they were going to report it. So a sell-off, and then stop losses hit, and then it's a low float, so more stop losses hit, and a combination of that just kind of sold it off, and then it just kind of started to consolidate, but then we had a bearish cross, and it fell some more, and now we're talking it's in the levels near during the crash in March. So, I think right now we're seeing it kind of bounce from 550 around to 550 to 570 quite a bit. So I'm adding in that level, and I think that we should see it curl back up because, in my opinion, there's no way that it's a $5 stock after trading above 7 or 8 for so long. And also, if you look, I put a square on the chart. That is where they had an offering, completely dropped off, and then one little bounce of news popped it all the way up to right to $10. So any news can absolutely send this from this price around 550 to 570. And in a interview with their CEO recently, he said big things are coming short term. And he also talked a lot about acquisitions and how they've really, really liked their Impact Biomedical acquisition and that they want to go down that road more times in the future. So for him to use that language for me is completely bullish, along with the chart being sold off and it's starting to kind of bounce around and starting to consolidate. It hasn't, but it's starting to. So I'm adding a starter, and I think I'm going to keep adding.